What's up, YouTube? Today's video, we're going to talk about the price of Bitcoin, but we're also going to talk about markets in general and human psychology and how it plays into everything. So we're taking a look at the Dow Jones Industrial Average on the log chart, basically from 1915 until the present day. And this chart really tells a story. It tells a story of American history, and it's fun to look at and to consider what was going on in the country at the time and how the market may have and ultimately did reflect some of it. So, I mean, you see here we have the Roaring Twenties where the market was absolutely incredible. Let's just take you in a little closer, story through history here. We start off at like 67, 890. We go all the way up to 400, and fortunes were created here. And then the subsequent crash, the Great Depression, the crash started the Great Depression, and you can really see just in proportion how big that was. A lot of us, we remember the Great Recession, right? Had nothing on the Great Depression in just impact. And so then you can see the bounce back, and then you can basically see the entirety of Roosevelt's presidency here. And you can sometimes see why the conservatives are critical that the recovery didn't make it back, but this isn't a political debate. And then you can see that 1943, this is where America enters the war. The war helped the economy get going a little bit. And you can see a little bit of evidence to that effect, that the United States was kind of heading downward here, and then we entered the war. And now, it's not that the war was the turnaround, but you can see why they might say that. And you can see the bull market all the way through the 50s. Nice time to be alive, for some people. But the 1950s were genuinely, good in the market. But then you see the stagnation here. Boom. The Reagan years, Bush years, more Bush years, Clinton. So it's interesting. But how does this all relate to Bitcoin? Because when you look at markets on a very long time scale and across a lot of different exchanges and a lot of different industries and whatnot, you're going to find that the undertone of human psychology has a really big impact. So in the United States, for example, the people with the buying power in the 1950s, after the end of World War II and the Korean War, had this very pro-American sort of enthusiasm. America was the world superpower, and everyone was kind of enthusiastic about the market. Things went up, America did well. For all of those reasons put together, it all factors in. But by the 60s, it's like we'd kind of run out of gas. And you can even see that in that the 1960s were a much more traumatic, crazy time in American history. A lot of drama, a lot of things happened, and even into the 70s. And you can also see why the Vietnam War, people lost a little enthusiasm for it, just because, and not even taking into consideration all the political reasons, but when the market's booming, people are very pro-America. Yeah, pro-America, support the troops, support this, support that. We got extra spending money. Okay, market is level. Market looks like it's going down. We don't have that money to spend on that meaningless war. Narrative changes. Excuse me. So then the Reagan years and so on, American enthusiasm. You got some of the Clinton years and then the tech industry. And then the Great Recession, the real estate collapse, all that mess. But anyway, a lot of you guys are not as interested in the market as a whole, but I wanted to do this as a bit of an introduction to when I go talk about Bitcoin here. And I drew a lot of lines there, but we're just going to delete them all and talk about it. So this is the Bitstamp chart, Bitcoin monthly, and we start out here at $3 or something. Now, I know from history that some point back in, I'll draw a vertical line to demonstrate here. But around here, the price went up to $30. And I'm just gonna kind of like 35 or something, but whatever. It's like about here. So the price was here, it dipped down to back here, it came up like that. Okay. So anyway, I think we have to have a few basic premises about Bitcoin and cryptocurrency as a technology. The first premise is you have to believe in it beyond it being a temporary phenomenon and something that's going to go away. You have to have some confidence and faith in the underlying blockchain technology. And my point is that even if Bitcoin is ultimately to be replaced, right now it has such a great market share and influence in the cryptocurrency space that if Bitcoin were to disappear, it's not going to be immediate, it's going to be detectable. And more importantly, if you're a cryptocurrency investor, you're going to be diversifying across the space and across the projects with the highest market caps. Those are most likely to be your easy fiat entry points. So for example, if you live in the United States, two of the most common ways to get into Bitcoin are through Coinbase and Gemini, which offer a limited selection of some of the more reputable or popular cryptocurrency projects. Most of the typical new investors getting into crypto are not going to be going onto the exchanges and sinking tons of money into these brand new projects. They're going to be diversifying across those entry points. So even if there's some new project out there, one of two things will happen. Either it will appear on one of those exchanges you've never heard of and gradually gain traction and gain your attention, or it will be immediately offered on one of the fiat entry points where then you could immediately begin diversifying into it and you're going to protect your portfolio that way. But the point is this: blockchain technology and the notion of this trustless system of payment, of decentralized computing and this, that, and like, that technology is not going away. And in fact, in the future, it's going to have much more utility and much more reason to have it. And you're going to see cryptocurrency as a whole sort of gaining an evaluation very quickly on the log chart in its early years. And what I'm thinking it'll do is once it finds it's a little more stability in the value, it'll taper off, and then we'll see the little arc I'm making. And the reason for this is right now, you got to understand, cryptocurrency's price is driven so much by speculation instead of utility. But as something's price is driven by utility, it reflects a little more accurately. And because of this, it's not quite as subjected to speculation. You'll see more liquidity in the market, and you'll see less range for this wide fluctuation. But as we come to this future world and environment where crypto is going to have more utility, you'll see that rise being very much more uniform. And to give you an example of what this looks like, I'm going to just go to Amazon. There we go, to Amazon.com. Okay. And this is Amazon on the log chart monthly. And you see that, okay, during the .com bubble and whatnot, everything pumping up, there was a huge rise up, big dip. But once Amazon, got mainstream and gained utility, I'd say like 2009, 2010, when Amazon became like more of a mainstream name, you're sitting at a share price of about $100. And as, the world changed, there was more use for Amazon and what they offered, you see this much more controlled, uniform rise that's taken us up to $2,000 a share and made Jeff Bezos the most wealthy man in the world, because Amazon and what they offer as a company gained utility and prevalence over that period of time. And my point and argument with regard to Bitcoin is you're going to see the exact same thing happen in cryptocurrency. So, and a lot of times it's confusing to watch these videos because a lot of the guys will use Bitcoin as more of a colloquialism for cryptocurrency. So kind of keep that in mind. But you see my point. And that's why I see Bitcoin as, guys, don't like screenshot this and base your buy and sell points on this. I'm just doing this to demonstrate, but you see what I mean? That sort of type of thing. Now, I don't know, $800,000. You could pull it like this. But the point is that the growth, the volatility is going to be decreasing as we increase in utility and liquidity in the market, this, that, and the other. And eventually, I think we'll see the price of crypto stabilizing. And then you get into the world of what is the future going to be doing with this new technology, and how many people are going to be in the market contributing to the possible value. And that's outside the range of anything I can talk about. But I do think that, you know, in the long term, we're going to see a very nice rise in cryptocurrency. This is not going away, folks. Short term, however, I think is a little more dire, and that's why I want to talk about that for a second, because today we got a pretty negative signal in the market. And you can go to the other guys' videos for the big detailed coverage of this. But long story short, we have been trading pretty flat in this descending triangle all the traders have talked about. And just today, we've seen a lot of volume taking us from about 6,400 down to almost 6,200 on the Bitstamp exchange here. And now we're finding some support, but you know, this is just a 15-minute chart. We're going to have to see where this day ends, and ultimately, the more important thing for the short to perhaps like, you know, monthly concern is, are we going to hold this all-important like $6,000 support level? Are we going to come through that and have a temporary new bear market? Now, I think that we are going to see a phenomenon called the final sell-off before the accumulation phase. And what that is the final weak hands leaving the market, people who just don't have the testicular fortitude. What usually happens is you'll see a trickle off and then maybe a rapid dip down to the next reasonable place of support, which is around $5,000, which is where the market seems to level off. It's where all the analysts say it's at, and it makes sense. So I think we're going to see that, and then we're going to see a build up in that range and ultimately a comeback that will start more at the, really about a year from now is when I think you're going to see the market really get the signals of turning around. You're going to see it come back and break above $7,000, $8,000, $9,000, and then eventually go off to all-time highs and beyond. Now, guys, I think that this could definitely happen a little sooner. I don't know the timetable of this. That's the harder thing. The reason I say I don't know is we have a lot of sell pressure, you could say, in about this sort of range. You know, you can get in here and draw that ray a little better, a little tighter, but it represents the idea. But we also have some degree of indicator from the market down here from the previous ramp up before the blue sky breakout, which indicates that there could be some longer term bullish momentum coming from here. But this is all up in the air. None of this is foolproof. These are just indicators, and really, I think they should factor into some percentage likelihood mathematical combination that some quantum computer is ultimately going to make, because really I think that this is a very detailed study of human behavior, and a quantum computer with enough information in the future is going to solve this. It's going to take all our money, and we are going to be royally screwed. Ladies and gentlemen, this was Blue Collar Crypto coming at you. I will see you next time.